The footprints of big money. In our last video, we uncovered the hidden language of the market, the whispers of price and volume that speak louder than headlines or rumors. But understanding the language is only the beginning. The next challenge is recognizing who is speaking, because behind the numbers, behind the tape itself, there are powerful forces at play. The great operators, the smart money, the titans who move markets long before the crowd ever notices. And that is our journey today, learning to recognize their footprints, the subtle signs of accumulation and distribution. But before we dive deep, if you want to keep following this series and sharpen your own ability to read the market like Jesse Livermore, make sure to subscribe, like this video, and turn on the notification bell. That way, you'll never miss the next lesson in market mastery. The truth is simple yet uncomfortable. The market is not an equal battlefield. It is dominated by large, sophisticated players with immense resources, patience, and foresight. They cannot announce their moves. They cannot simply buy everything they want at once, or sell everything in a single moment. To do so would betray their hand, push prices against themselves, and destroy their advantage. So instead, they move quietly, systematically, leaving subtle trails that only the trained observer can recognize. Livermore called these the footprints of big money. To follow them is to stand beside giants. To ignore them is to be trampled beneath their stride. Accumulation. Quiet buying in the shadows. Accumulation is the art of building a large position without drawing attention. Imagine an operator who believes a stock is undervalued and poised for a major rise. If he were to buy recklessly, the price would spike immediately, alerting the market and driving away his advantage. So instead, he buys carefully, in fragments, often during periods of weakness or dull sideways trading. His goal is to absorb supply without sparking demand. To the untrained eye, the stock seems stagnant, boring, lifeless. But in truth, the operator is quietly tightening the spring. Every share sold by the impatient, every dip triggered by bad news, is absorbed silently into strong hands. The price refuses to collapse, even under pressure. That refusal is the whisper of accumulation. Livermore spent years watching for this pattern. He knew that when a stock refused to go lower despite endless selling, something powerful was happening. It was not random. It was a signal. The stock was being gathered quietly, prepared for a move that would later appear sudden to the unsuspecting crowd, but never to the tape reader. Distribution, the silent unloading. Just as accumulation is the quiet gathering of stock, distribution is the equally careful unloading. When a stock has risen too far, when insiders and large operators are ready to cash out, they cannot simply dump their shares on the market at once. That would send prices crashing, exposing their intent. Instead, they distribute patiently, often during euphoria, when the crowd is most eager to buy. On the surface, prices may still look strong. Good news abounds. Optimism reigns. But beneath it, the operator is selling into strength, handing his shares to those who are too blinded by greed to see what's really happening. The footprints appear in the tape. The stock struggles to rise despite glowing headlines. Each rally is met with heavy selling. Volume swells, but price barely advances. The music seems to play on, but the dancers are already leaving the floor. That is distribution, the silent retreat of smart money before the inevitable decline. Price and volume, the hieroglyphs of big money. How do we recognize these footprints? The answer remains the same: price and volume. In accumulation, prices stabilize or drift slightly higher, even in the face of bad news, while volume increases quietly. In distribution, prices stagnate or weaken, even amid good news, while volume expands as the strong hand unloads into eager buyers. Livermore called these signals as clear as footprints in the sand. To most, they are invisible, but to the trained eye, they are unmistakable. The market may lie with words. It may deceive with headlines, but it cannot hide the weight of buying and selling when measured in price and volume. The trap of the crowd. Here lies the cruel irony. The crowd almost always reacts too late. They buy most eagerly when distribution is nearly complete. They sell most desperately when accumulation is already underway. The headlines, the opinions, the public chatter, they are not signals of what's about to happen. They are explanations for what has already happened. By the time a story makes the front page, the smart money has already acted. By the time an analyst issues a glowing recommendation, the operator is already selling. The public forever arrives after the feast, scavenging for scraps. Livermore himself built and lost fortunes by reading these cycles. He knew that to follow the crowd was to follow late. The real profit belonged to those who could see the footprints of accumulation before the rise, and the traces of distribution before the fall. The discipline of observation. But make no mistake, this is not about guessing. It is about disciplined observation. The tape reveals its secrets only to those willing to study it without ego, without haste, without distraction. To see accumulation, you must be patient enough to notice that a stock refuses to break lower despite every reason it should. To see distribution, you must be detached enough to notice that a stock cannot climb higher despite endless cheer. This requires silencing your own desires, the desire to buy because you hope, the desire to sell because you fear. The tape does not care about your emotions. It speaks only truth. But truth can only be heard by the observer who listens without bias. Case study: the market that wouldn't fall. Consider those moments when the market seems poised for disaster. News is dire, selling pressure is everywhere, and yet prices refuse to collapse. To the casual eye, it seems baffling. To the tape reader, it is clear. Strong hands are absorbing the supply. Accumulation is in progress. The smart money is building positions while the crowd panics. And later, when optimism returns and prices surge, the crowd calls it a surprise rally. But for the one who saw the footprints, it was no surprise at all. The groundwork was laid long before in the quiet absorption of shares. Case study: the market that wouldn't rise. The opposite holds true as well. In euphoric markets, when good news is everywhere and greed blinds the crowd, watch carefully. If prices stall, if they cannot rise despite every apparent reason, distribution is likely underway. The strong are selling to the weak, passing the burden of risk onto those who believe the music will play forever. When the decline finally comes, the crowd calls it a shock, but the tape reader knows it was written in the footprints long before. The path of mastery. The lesson is not complicated, but it is difficult. To profit in markets, you must learn to see what others ignore. You must learn to read price and volume not as random noise, but as deliberate footsteps left by the giants who move markets. This is not a gift. It is a skill born of study, patience, and discipline. It is the art of stepping into the footprints of big money instead of being trampled by them. So remember this: the market is not fair, and it is not kind, but it is not silent. It speaks every day through the footprints of accumulation and distribution. Learn to see them, and you will stand with the few who move early. Ignore them, and you will remain with the many who always arrive too late. In our next video, we will explore how the market sets deliberate traps, the false breakouts, the failed moves, the cruel illusions designed to lure the unwary. Because even if you learn the language and recognize the footprints, you must also learn how the market deceives. And that lesson may save you from ruin.